All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots and lots of notes. And let's make sure that we participate and engage. If everybody's all set, we know what to do. Drop me a one in the chat and we can get this session started. All right, so let's get this thing going. Hop over to the Forex Factory. And today, right, we had Governor Bailey speaking in regards to the UK and the central bank. Bailey getting inflation back to 2% target, right? That's still the key, right? That's the goal for all central banks. A couple of live squawks. If there were to be more evidence of more persistent pressures, then further tightening in monetary policy would be required. Daily inflation is much too high, and we need to bring it back sustainably to our 2% target. The MPC is continuing to address the risk of more persistent strength in domestic price and wage setting. So after the initial recovery in 2020, the level of economic activity measured by monthly GDP has failed to grow beyond its pre-pandemic level on a sustained basis. So all types of tweets and live squawks there. So hey, summary, we got to get inflation under control. Okay, so we look at, of course, they're all going to be data dependent, but hey, they're way away from that 2% target. So we expect the possibility of more rate hikes coming out of the Bank of England, and that's typically good for the currency in terms of strength, right? And speculating a stronger British pound. So we'll continue to see how that goes. We know right now, right? It's been bullish, right? So it's right in line with what's being said. Okay, right in line with hey, we've got to get back to that 2% target, and inflation is too high. So that was important today. What else? We go back Tuesday, Wednesday. Tonight we've got, I don't know, I was misspeaking yesterday. For some reason, I thought I was looking at the calendar wrong, but at 9:30 tonight, we have the employment data coming out for Australia. So we want to watch out for that. That's pretty important data. As you can see, it's highlighted by the red folder. Thursday, the 18th, my anniversary tomorrow, everybody. So we will not, I guess I'll let everybody know that now, we will not be having sessions tomorrow. Really, Brian will send out a communication on that, but he has a lot of things that he has to get done tomorrow early, and then tomorrow's my anniversary. So I don't want to be in the doghouse, so I'm not going to have a session tomorrow.
That's a smart man. Congratulations.
I appreciate it.
Anniversary. Happy anniversary. How many years, if you don't mind sharing?
Oh, man. So let me see. It's 2023 now, and I got married in 2008. So that's 15
Good
years.
Job. Awesome.
Yeah. And so we
proud of you.
I appreciate it. Right. So
that's big.
I just learned over the years to be a bobblehead. Just nod yes.
You should have told my husband that. We might have lasted.
So yeah, we've actually been together since 99, 98, 99. So we met in college. I was playing football, softball stuff.
That's impressive. That's impressive.
Appreciate it. Yeah. So definitely blessed. Definitely blessed. So yes. So yeah, tomorrow's the anniversary. I appreciate all the love in the chat. I really do. So yep. So that's what's going down tomorrow. Let me double check something. Yep, Ryan said the email will go out. So all right. So yeah, so we're looking for Aussie data at 9:30 tomorrow. We've got unemployment claims coming out for the United States, right? We'll keep a close eye on that, right? As that's an important gauge on the economy. And then we've got Bank of Canada Governor Macklem speaking tomorrow as well. This is going to be interesting tomorrow at 11 o'clock because we know that they've paused rates, and we saw the latest inflation data come through, and the inflation crept back up a little bit. So it'd be interesting to see what the Bank of Canada has to say tomorrow in regards to that. So we'll have our eyes and ears pinned to that, and we'll see what happens with the articles that come after Governor Macklem finished speaking. So we'll see. We shall see. So not. I mean, we've had a lot of FOMC chairs speak this week. A lot of central bankers speaking this week. So we don't have a overwhelming amount of red folders, but being that inflation is so key, I tend to not skip over any of the information as it has the ability to move the market, especially when these Fed members and central bankers are speaking. So we'll see what happens. We'll see what happens. And then we've got Chairman Powell speaking on Friday, and we've got Lagarde speaking again on Friday as well, head of the ECB. So, all right. So that's that there. We'll take a look over at the dollar, right? Dollar's getting a boost. We know that earlier in the week it was kind of playing that safe haven over some growth concerns. But, now here in the States, got some positive news, I guess, in relation to the debt ceiling, maybe reaching a deal, all the ridiculous drama, right? Folks can't act like grown-ups. But on that positive news, we got a rally, right? What was it today? I seen it earlier. Stock market today, right? Dow rallies 400 points on debt ceiling deal. So got some positive data there. We definitely don't want to default, as a country. So we continue to keep a close eye on it. But right now we got a debt ceiling deal optimism. So no deal yet, but guess we got some good information coming out of Capitol Hill today. Whatever that means. But here we are. So the dollar DXY, okay, kind of right at the top. We broke that high of that range. So we'll see as we move throughout the week if we get a continuation pushing north on the dollar. So kind of still, in between, right? Kind of still ranging. So we'll see if it can continue to gain momentum to the long side. So let's dive into the charts. And we had some chatter going back and forth in the Discord related to the pound yen. So let's start with that today because that has been a big mover for us. So we'll start at the top. Okay, so we'll walk through it top down. We can see clearly we're pushing bullish, right? So we had 2 weeks of correction on the pound, and then we're moving back up to retest at 172.34. So we are moving bullish on the pound weekly candle. That's long, right? That's long. So if we come down here to the daily, we can see that we do have a stochastic that's in the buy zone. We're in the midst of a C to D push zone, okay? But we've got that key level of 172.34 that is going to have to break through to continue on to that D extension. That's way up there, right? It could take some time, okay? But based on that 61.8 correction, we look for a 1.618 D extension eventually, right? Now, we talked about it last night. It can consolidate, it can push back down, it can do all types of things, but ultimately, we look for that price target to get hit. As a matter of fact, right, you see just 28 minutes ago, report came out, Japan exports grow the least in 26 months, right? So if you see a decline in exports from a country that is heavily dependent on exports for the economy, that can create less demand for the currency, all right? And now we already know that they've continued along their ultra loose monetary policy path. So we still have your major currencies moving bullish against the Japanese yen, right? And we saw price take off a bit today, right? It got really, really active. So this is where we are. If we come in and we just look right, focused in on this leg, you can see we got a bullish move coming right back up to that monthly resistance level And now we've got corrective action going on. So if we come down to the 4, we can see if we zoom out how we've got that 236, right? That price came into once and then we double bottom, right? So when we first start trading, right, you hear a lot of stuff, just look for the M's and the W's. I don't know if anybody remembers that. Look for the M's, look for the M's and the W's. Well, here's a W, right? And we always say there's caveats to when we use the fib, that, hey, we want to make sure that we do recognize, right? Even though it's not at our ideal fib level on a 4, we want to make sure that we recognize structure, right? We've got a daily support level of 167.97, and price has respected it and it gave us a double bottom. Okay. Joy, you remember that? Yeah. So Joy, the 21st, huh? So that's on the anniversary. Well, happy anniversary. You said 21 years? Or it'll be the 20, it'll be the on the 21st, or it'll be 21 years? On the 24th.
It'll be the 21st.
Man,
that's awesome, Joy. Wow.
That is awesome. That's huge. I'm trying to be like you when I grow up.
I know that's right. I ain't mad. Congratulations, Joy.
For sure. For sure.
For sure.
It's a big deal. It's a big deal.
It is.
Semi-high school sweethearts. That's what we argue about.
Oh, wow. That sounds like Benny. That is so cool.
It's like we dated during high school, but not until after high school. So semi-high school.
That's crazy. I was married 21 years, but got divorced at 21 years. But we best of friends. We homies.
Hey, that counts.
It does.
That counts.
It does.
That counts.
That's awesome, guys.
Yeah, for sure.
Thanks for sharing. Yeah, that's cool.
Yep. Congrats again, Joy. For sure. So here we are, right? We're in this W pattern, right? Price is moving up. So we're looking at this leg right here. And you can see on the smaller wave, right? We always say, hey, it's a fractal, right? The market is built in fractals. So if we come down to the lower time frame, you can see, right? Here's that same box. Okay, right there. Boom. And where you've been moving up. So we've got 1 teeny tiny wave, 2, 3, and now we're on the 4th wave. Okay, so what's going to be interesting is this reaction right here. There's 171.21, right? To see who has control of this market. We got a new AB boundary and price is turning over, right? It's turning over. So ideally, from this 1 hour chart, 15-minute is similar to, we'll check that out. So ideally, we know what we want to see. We want to see price come down to that sweet spot, right? And correct. For us to take, a pretty high risk to reward shot on that moving back to the upside. That's ideally what we want to see. So when we go down to the 15-minute, we've got similar price action going on. Now this fib is off, right? So you need a slight adjustment on that fib. Okay, that's your high right there. Sometimes the algorithm misses it, but it's okay. It's in the vicinity. So you can see here, 1 ABCD wave, 2 ABCD waves, 3. And now we're on that 4. So again, what we want to see is we want to see that price come into our zone. Ideally, we want to put that stop below the A, because as long as it doesn't take out the A, it has no choice but to go our way. Now, some of you, right, may trade where you try to identify that C, lowest point within the AB boundary, and you want to, hey, I got to swing low, maybe I've got a trend line break, and then I want to put it below there, right? So you got it below the A. We talked about that last night. Some folks, hey, I like it tighter, but what I would recommend if you do that, you're either going to be aggressive, right? Off your trend line break. Okay. Boom, I got a break. Ideally, a break and a close in this situation, if this hypothetically was to happen right now, right? Above and close above that 171.21. And some folks say, hey, I've got a low in the area. That means I've made a higher low, and I just want to put my stop tighter below that higher low. Because you can let it break, and it pull back, and then that's a sub fib, right? Like that. Boom. And you say, that's my play. Okay. And you set up your risk to reward ratio off of this fib. And then, hey, if you get taken out and it pushes lower, that's the ball game, right? That's the game that we play when that stop loss is within the AB boundary on this capital fib here. Okay. So, but that is an option. And you say, well, I'm going to play this move like this. Okay. Off this fib. Because I want my stop loss to be a little tighter. Okay. So it's the same rules, right? If I'm playing it like this with the tighter with the stop below my sub fib, below my higher low, below support, right? Then over time, if I do that consistently, my edge still should play out, right? We just know that we have a higher probability of being stopped out, okay, when we play with that stop loss within that AB boundary. Okay, so below the low, okay, below the A, below the C, right? Those are our options, right? Now, some folks, you're gonna play it below here, right? You just get tighter and tighter and tighter. But I typically, I love to play it below the A. Okay. JC.
Question.
Who's that? Who? Hold on. Who's that?
Joy.
Joy. Okay. What's up?
Okay. So in the area that was selected for like a support zone, I'm looking at a pivot, which means the green and the red, and then I'm looking at the 5 candle candlestick as the support area, as an area of a support. So which is on the primary on the first fib over.
Hold on, let me clear this.
So I think that is no, go back up. No, go back where you was at. No, right where you had it.
Here?
Dang it, you can't see where I'm pointing at.
You have your computer up? You want to show your screen?
No, I'm on my iPad. No, put the marker where you originally had it at.
Around here somewhere.
You actually had it okay, so the area in between the fib is where you had it first, where that 5 candle swing low was at. Okay, so right there, and then the area right below it.
Right here?
Yep.
Okay.
So my question is, because I've been trying to, when it's in a strong trend, what I've been trying to focus in is whether if it's a pullback or reversal. When I see areas like this, should I, how can I say this question? Is it probable that the area of rejection will come off the 5 candle format or from the pivoted area? And the reason why I call it a pivot because it's from green to red, but that area in between is a 5 candle format.
So let's look at this. All right.
And I'm trying to train my eyes from future resistance, future support to
Okay. So look at this zone right here, right? If we didn't have anything on the chart, okay, and you're thinking, first of all, you've got this area here. You see that?
Yeah. Yes.
Okay. You see that? That's the zone, right? That's the first stop. Okay. But then you've got areas here. See this level here?
Yes.
Right in this area. So you've got the potential in both those areas. That's if I didn't put a fib on it, this is what I'm looking at, right? Paths of resistance becoming future support. If that breaks down, I've got another zone here.
Yes.
Right. So what happens is using the fibs help you to create filters, right? When you look at these levels. So it is really cool because I see this right here. Okay. It's pretty high in the zone. Look, we hit, you see traders, I see traders all the time do it, right? They'll take it, it'll push up, right? And maybe it depends on what they're trying to accomplish. So maybe they're trying to get it off this support and then back to resistance here. Okay. Okay. Back to this level here. So they may say, if I can take it here, I'm looking to get back to resistance. I'm looking to buy. Boom. That's 72 pips. That may be their game, right? A little bit different when you swing trade. We use the fibs because it can help us create filters in regards to support and resistance levels in regards to based on this impulse move up. If I drop my fibs, where would that ideal level be? Well, some people take trades off to 382. That's a 382. You have traders that'll take it and put that stop right below that low. I'm not going to put it below the A. It's too high in the zone, right? It's got my risk to reward all messed up if I put a stop loss that low. Okay.
I'll put it below the previous B.
Here.
Yeah,
like
give
right
or
there.
take.
Yeah, give or take. Depending on what you want your risk to reward, right?
Okay.
If you're playing that game. So if somebody was taking it, you know, hey, I'm getting back to this B high of resistance, right? Then maybe you could play that as long as the math worked out for you. Some people are gonna put it that like their stop loss is super tight. They're gonna put it right below that low.
The C.
Right? Yep, the C at that point. Ideally, with my trade plan, I'm like, hey, this is my area down in here, right? So different things for different traders. If I want to put my stop below this A, and that's my game plan, then I'm most likely going to pass on this because I needed to come down into my buy zone. And that's when I'm going to start looking for a low to be formed for this past resistance level to confirm as support. Then I'll look, right, to take this position, right, deeper in the zone because of where I want my stop placement to be. All right. So you see that? So good. So just over time, like I'm just more comfortable. Now, am I gonna have a wider stop loss with my stop below the 8? Yes. Is it gonna bring my lot size down? Yes, it is. It is. But that's all relative to the size of your account, you know. And hey, if I'm risking 1%, I want it to be 1%. If I'm risking 2%, I want it to be 2%.
Well, the reason why I asked that is because I have two different brokers, and within the two different brokers, they have different metrics. And I noticed that in the international one, I have better probability far as the regulated one because the numbers is like off. And so what I've been studying is, and I just got to get better at it. I'm still addicted to putting my trades in on MT4 and just doing my analyst on SmartTrader, and the metrics is off. So when it comes to it, then I have to do my math with the spread, with the entry difference than what the number is on SmartTrader versus what's on my MT4. On Danda, the whole number system is like, is Europe because I'm not a size 5. We don't have a size 5 in the United States. So, but I keep losing out on Danda, and I'm taking the same entries that I am on my other brokerage. And so I noticed that when I'm doing, if I'm not taking it on how you showed us on the fib, I'm not getting a winning trade by putting the metrics in, whether if I do it manually or copying it from SmartTrader. So I was just trying to find a way to do the support and resistance in the trend. Now, if I do the 80-20s, then yeah, I'm good. And that's just because of the numbers. But Odanda is starting to make me mad. So I was just trying to find the edge.
Orlando, you got spread issues, right? Spreads are high.
Well, it's not even the spreads, because the spreads is higher on KOT. You know what I'm saying? The spread's a little bit higher on KOT than what it is on Odanda, and it's just the number difference. Because like I had a trade in, and when I had gave the number, both you and Ryan both say, huh? And I'm like, yeah, because that's what I put in on Odanda, and it wasn't nothing that was it, and it was just how my trade went in, because it was a market execution. So it wasn't like I missed the entry. It didn't hit my sell entry, but my sell limit, but it was close enough to where I'm like, okay, I'm gonna go ahead and do a market execution. But how the number came out, it was just a weird number. It was real odd, because I was trying to put the metrics on KOT, and it would not. KOT kept putting the metrics where it wanted to put it, and not how I had it on Odanda. So it was just weird to me. So I keep losing out on one brokerage, and I'm winning on one, putting the same entry on another one, and losing on that.
Okay. So what we'll do is we need to set up fine time. We'll set a one-on-one up, and we'll go at it. We'll go at it on the Zoom to figure out where things are off for you. How's that sound? So that way we can get you straight.
I appreciate it.
Okay. Yeah, because something's off there. We can figure it out. We put all our heads together and figure that out.
Okay.
Yeah, for sure. I appreciate it. So we'll connect. We'll inbox and connect. Yep. All right. JC.
Hey, Benny.
Hey, what's going on?
Not much. How you doing?
I'm doing pretty good. So let's talk about it. What's going on?
So I've been back testing. Oh, sorry. GJ, and there's been a couple, maybe two for sure, where I've taken a trade and sorry, and it's like the actually, let me bring it up, Benny. Sorry, I should have just brought it up.
Hello?
Yep. Can you hear me?
Yeah, I can hear you.
No, I'm sorry. I was trying to bring it up. Sorry.
You want to share your chart?
I can. That's kind of scary, but I can. I definitely can. But
okay. Hold on 1 second. Let me move you over. Okay. I just sent you you should be able to switch over. I just promoted you to panelists. Okay, give me 1 second. I got Zoom user on here. I don't know who that is. Who's Zoom user? I don't know who that is. There we go. Okay, control of your mic though. Somebody say something? I don't know. All right. Can you sure you getting live chat ready? That's my next question. Okay. Go ahead, JC. You want to share? Let me stop my share. You can bring yours up.
Alrighty. Can you hear me?
Yep, I can hear you.
Okay, perfect. Can you see my screen yet?
Nope, not yet.
No. It says host disable participation screen share.
What?
Yep.
Oh, hold on 1 second. I got you.
All right.
Hold on now. That's there you go. You should be good.
Okay. All right. Sorry. So I have to figure out, sorry, I should have this up, which one in particular it was. Let's Sorry, y'all. Okay. Oops.
Spreadsheet.
Sorry. What did you say?
I like your spreadsheet.
Thanks.
This is impressive.
I was thinking the same thing. I love it.
What
I
is
look
going
created and
on?
everything.
Yes.
We gonna be on your heels now, girl. We gonna be on your heels.
Stop. You gotta start trading. This is everything you need.
Girl, this is awesome.
Okay.
Beautiful. This is some beautiful work here.
All right. I think it's this one. Let's see.
I should have paid attention to my Microsoft Office course.
Oh man, I learned all of this over the past like couple years on YouTube.
That's
I will be
awesome.
on YouTube.
University.
YouTube
Yes,
University.
I love YouTube University.
Okay. That is that.
Because how you got all them files? How many gigabytes or terabytes you got? They call terabytes now.
I don't know. And I can't find it, y'all. I'm so sorry.
Because I keep getting
That's okay.
memory
Full.
full.
Memory full, Joy.
Yeah, I've had to I have to clear some stuff before I have. Oh, here it is. I think this is one. Okay. Here it is.
Okay. All right, let's talk about it.
Okay. This is 13. Okay, perfect. All right. Yeah, maybe I need to close some stuff. Sorry.
That's the 13 right there.
Yeah, I'm trying to go to the entry of it. All right. Kind of like the front and back, entry and exit.
Okay.
The daily. The 4 hour. And then the 1 hour. Okay. You see? Can you still hear me? My screen seems like it's
I can see it. I can see it. Can you zoom out on that chart that you had up?
okay, yes. Okay.
Yeah, just zoom it out.
All right. Okay.
There we go.
So that was the 1 hour view of it. And so what happened was, I guess it was the respect of this, I guess. But when I went back, I'll take the one down. So those are the two looks.
Okay, hold on a second. Zoom. Where's your 1 hour? Where's your 1 hour chart?
This one on the left.
This one. All right, pull it up for me. Pull it up. Maximize it.
Okay.
Now, can you zoom your this trading view, right?
Mm-hmm.
Just zoom it out for me.
Well, this is
zoom
a
out.
screenshot, so I can't.
It's a screen. Oh, it's a screenshot.
Yeah.
Okay.
Yeah.
It's hard. Okay, go ahead and zoom out. It's hard. It's hard for me to see on that. Let me. So you're okay. So tell me your challenge. You're trying to go long.
So in this situation, yes. So I went long, and so
off the trend line break.
yes, off of this here, and then so initially my target was up high, but then it got here and it just plummeted.
Okay, right, because you ran into resistance. So where was your entry?
165032.
165.032.
Mhm.
Okay. So do me a favor. Pull out your fib. Pull out your fib on your oh well no you can't. I'm sorry. Okay, this is a this is a screenshot. My bad.
Yeah. So what you saying was like to take that low and just run your field up from that low?
Right. You running from your low prior to the trend line break.
Okay.
To the first high.
Okay. So because I don't run the trend lines from scratch from the daily, would that work for me, or will I run into some like trouble with it?
No, you're good. You're good. Like even on this setup right here, right? On this setup right here, how long ago is this recent, like today, or is this from the past?
No, yeah, this is from the past.
Okay.
Yeah.
Okay. So if you played this off this trend line, right? So you came in and you found support, and then it broke trend line, right? So when you run your fib off that low prior to trend line, you're gonna run your beat boundary is gonna be at that high after the trend line break, correct? Yes. Right? Yep. From that low to the high. So you look like you got between a 50%, almost 618 pullback.
And that's how I was thinking. I was like, that's what bothers me, because I'm like, this looks like something. And then I wish I could find another one, because I went back and I saw somewhere where I could just adjust it, like going backwards. I really want to find that one.
Right, because that right there, where that price ended up correcting, you see how it collapsed?
Right here.
At the high up there, see at the high where it started to have problems? That's probably at your extension level.
Yeah, from here to here.
So
right. So
when you say when it reached the extension level, if you just plant the fib, that would be the psychological, okay, I could take a profit or taking money off the table there.
Yeah, it's coming into alignment, right? I'm pretty sure if you measured that from the C where she her entry is right on point, right? That 165.032. That the extension, I guarantee you, was right up there around resistance. For one, it's an extension and it's coming in good confluence with a resistance level. You've got the zone drawn out. The zone is there.
And that's what I was thinking. I was thinking too, Benny, like, is it just me overextending that take profit?
Yep.
Okay.
That's if you're playing that 1 hour, that was your way. Now, if you have a longer term target from the higher time frame, it's gonna correct. Now you're trading the pound yen. The ATR on that is large. You're talking about a pound pair. Yeah. So if like you said, it turned over how it turned over right there, that could be expected. You're running into a previous resistance level that's pretty strong. If you look left on that structure. Plus, I'm pretty sure that's running right into an extension level. Okay. Right. If you pull your fib from that low to that first high after the trend line break and look at the pullback that you got, you probably hit a 161.8 extension level. Okay. So if you were just playing it to that extension level, if you pull, what is that, like 100 pips? Gotta be on a GJ.
Yeah.
To the top of that resistance level on that C to D push. So if you took profit at that level, that's a winning trade. Now, this correct. Now, if you're looking at higher levels and high, for it to move higher based on a higher time frame markup, then you have to expect for it to at some point it's going to correct and then continue. If the GJ is going to continue if the pound's going to continue bullish, right? This is a correction and it's going to be followed by a continuation eventually. Now, if you moved your stop up into profit at that point, then yeah, it stops you out because your ATR on that, the average true range on the GJ, is huge. So you're doing a good job. You're doing a really good job on that. You're doing a good job on that.
Okay. Actually, Benny, this is the one where it happened at, because it took me out right here and then it plummeted and literally went like straight down. And so I was wondering.
So you look like you tried to sell this one. Yeah. You tried to short?
I be trying to do everything, Benny.
Yeah, no, I get you. I see you putting in work. So for one, you're short. Look at where your stop is, right? Your stop is hold on one second. I don't know if I can hold on. Figure that function out. But look at where your stop. You see that high right there? You see it? Your stop's not even above that high, right? So your setup, you went off that other high, right? So when you think about the GJ and how much it moves, that it's a really tight stop.
Okay.
It's a really tight stop, and you got, you know, depending on, you know, it's a really tight stop for the GJ on it, but you got the trend line break, and it may eventually correct down, right, to the downside.
It
Yeah,
did.
it did. So your stop was just too tight, right? Playing the GJ like that. You drew that up on the money.
Okay.
You drew that up on the money. So look at your zone. Look, you drew the resistance zone up.
Mm-hmm.
Right, but you didn't put your stop above that high.
All right.
You see what I mean?
Yeah, I do
Like
struggle with that. That is definitely
you're putting in work. You're putting in good work. So you got an inner trend line break. We know oftentimes it likes to gravitate towards the outer trend. Like you said, it did exactly that, but you missed it just because your stop loss is too tight. Right? Don't be afraid to widen that stop loss and just lower your lot size.
Okay.
Right? You know, and because it's all right. We always say, right, we are dividing our risk by our stop loss. You know, so if I'm risking 1 or 2%, I'm going to divide it by my stop loss. So on a GJ, your 1% might represent 2 micro lots, as opposed on a Euro GBP move, that same 1%, because your stop loss isn't as wide because it's the Euro GBP and the ATR, the range is a lot smaller compared to a GJ move, right? That 1% might represent 5 micros. That's the magic in doing that.
Okay.
And then sometimes people say, like, well, I mean, based on my account sense, I can't even trade the 1%. Well, we always say, like, at minimum, trade 10 cents. Trade 10 cents. If the math come out, you're like, man, it say I can't even trade. Well, you probably can't. But that's okay, because then maybe you say, you know, I'm gonna go to a lower time frame, maybe to 15, and try to see if I can make it work, or just trade it at a dime. Just trade it at a dime. That's why you're putting all this work. You're in that discovery phase. But this was a brilliant setup that you marked up. Hey, you just journal. Okay, my stop loss was too tight. They call the GJ the beast for the reason, because it can really move.
Okay.
You know what I mean? It can really move. So I need to play. You know, let me do my homework on ATRs. But even with the ATR, if you would have just put your stop above your high, right, above your zone that you marked up perfectly.
Yeah, you're right.
You've been good on that
That's what I
trade.
be getting. Yeah, that's what I've noticed too. Like it'll break a trend line, but it won't break the zone, and then it'll respect the zone more than with a trend line, if that makes sense.
Correct.
Okay.
Correct. Okay. Right. Correct. So your trend line is just additional confirmation on your trade idea. It's like diagonal support and resistance.
Gotcha.
You know. We had a question. Who was that? Kim.
Hey, Finney, you were saying something about the resistance or the stop loss is divided by something, and my pen stopped writing, so I couldn't get it. What were you saying about that?
I'll type it out.
Okay.
This is because this is so important, right?
Yeah.
Because this is how we survive in the game. Okay. Because believe it or not, we're not right all the time. So this was crucial in my trading, because it doesn't matter the pair to me, especially I'm swing trading. It doesn't matter the pair. It doesn't matter the stop loss. I'm always gonna make sure I'm coming out around. If I'm saying my risk is 1% or 2% or 3%, I'm gonna make sure that no matter what that setup looks like, I'm gonna come out if I lose at that 1%, for example. So let's do it like this. So if I have So if you get this down, you could do some damage in the market, right? So let's say I've got an account size of $2,000. Okay, $2,000, and my risk is 2%. Okay, somebody tell me what's 2% of $2,000? $40. Beneath, my man. All right, $40. So I'm risking $40 at 2%. Okay, I got $2,000 account, so 2% equals $40. Now think about this. Think about how often people blow accounts. Kim, you got a question? No?
No, I'm sorry, I failed to take it down before.
Okay, that's all right. It popped up again and notified me again. It's all good. So that's $40. Now, if my stop loss is let's see, let's do 75 pips. So my stop loss equals 75 pips. Okay, I'm going to divide my risk divided by my stop loss. Okay, that's going to give me my lot size. Everybody follow me on that? Yes, no, maybe?
Yes.
All right, so if I take that $40, somebody do it. Take that $40 and divide it by 75 pips. What does it come out?
0.53.
0.53, right? And so we know when we set it up in our phones or whatever, we can't do the 5.3. So that's 0.05. That's 5 microlots. That means what? I'm trading that at 50 cents. So that means I can take this trade at 50 cents. So if I have a 75 pip stop loss, so if I'm in a position, right? Okay. And this really should be like lesson number 1 in any course before you even know what it's all about. Like, hey, let's talk about risk management. Like, what is risk management? Don't worry about it. You're gonna know why it's important, right? When we go through the rest of the lesson, right? This is very important. So let's say, okay, I'm looking to take a trade, and we're just gonna say that this stop loss here, right? If I put my stop below the A, that stop loss is gonna be 75 pips. Boom, like this. So we draw our little box. Wish SmartTrader had a position tool like TradingView, but they don't. Hopefully one day. So if hold on, let me draw this first. If I take this entry at 75 pips with a stop loss of 75 pips, boom. And we're gonna say that this is 75 pips. Okay. Okay. And say this is a big mover, GJ. So my D extension was a 3-to-1. That would be, what is that, 225, I think. Okay. Something like that. 225 to my D extension. Okay. So 225, we'll make this buy square. Dang. So I'm at, if I lose and it hits my stop, I'm negative 75. Right? If I hit this trade at a 3-to-1, it's plus 225. Just like that. Okay. If I lose this trade and it hits my stop, How much money did I lose?
$40.
$40.
$40, which is why I always say you win the war before it starts. I am a manager of money. How much can I afford to lose from the beginning? That's 2%. Right? 2%. Now, I'm trading at 50 cents. It's really 53 cents. So it's actually going to be a little bit less than 2%, right? So I'm at 50 cents. If I win that trade at 225 pips at 50 cents, how much money am I going to make?
$112.
$112.
12.50.
112.50, right? We're gonna take that 50
Hold on.
cent too.
It's
We're gonna take that 50.
225
We're gonna take that 50 cent.
50 cents.
112, right? Because we're
Yeah,
trading at 50
$112.50.
cents.
Yeah.
112.50, right? It's in half. That's the game. But I know no matter what, I lose 2%, $40. Right? If this stop loss was 100 pips, I'm gonna take that $40, right? Easy math, and divide it by 100. And somebody tell me, if I had a stop loss of 100 pips, what am I trading at in regards to my lot size? $40 divided by 100, 40 cents. That's it, right? 40 cents. So regardless, or whether that stop loss is 75 pips, or whether it's 100 pips, if I divide my risk by my stop loss, I know that if I lose that trade, I'm gonna be out at 2%. If I do this consistently, right? Now think about how disciplined you've been, right? Think about it. Ask yourself, how disciplined have I been? If I trade at 2%, I'm not gonna get into pit value and all that tonight, which can slightly shift, the value of the money, but just flat out, right, at an elementary level, right, in regards to just keeping it simple. That's what I mean. I would have to lose at 2%. I would have to lose this same trade 50 times in a row to blow all my money. So that's why we build that trade plan, because we create filters for ourselves. So everything in the market doesn't look good, and we're not trading from our gut. We say these are our sweet spot zones that we prefer to trade. Of course, we have our caveats, like we saw the double bottom at the 236 instruction, things like that, right? But at its basic level, it's like, hey, if I'm trading this sweet spot zone here, if I trade that 80-20 zone and I'm patient and I wait for those setups, how many am I going to lose? Do I have to lose in a row at this particular risk to blow my account? And you see, right, when you're putting yourself in these scenarios, right, it could be as little as a 1.5 to 1, 2 to 1, 3 to 1, whatever, right? I set myself up to where I'm going to overcome these losses because of my risk to reward ratio, right? Because I'm not trading at a 1-to-1. Now, as I get better, now at a 3-to-1, I know that I only have to win 3 out of 10 trades to actually make it. Okay. But we want to be better than 30%. We want to get better over time, because it does take time at picking our spots, right, in the market and doing our top-down analysis and getting our overall direction, right? Because we want that strike rate. We want to maintain a good risk to reward. And we want to have our strike rate improve as we get more experience. So now that's going upwards of 50%, 54%, 60%, 70%, right? because it can vary. You will have periods where you have periods of drawdown, longer drawdown, where it's like, man, I just lost 3, 4, 5 trades in a row, you know. But listen, if I lose 3, 4, 5 trades in a row at 2%, I'm nowhere near losing 50 trades in a row to blow my account. Right? All of this is helping somebody.
Yes, it is. Yes, it is. It's a
Awesome.
great. Yes, it is.
Awesome. Because this is why we plug them in. We find our spots and we plug them in, because just like you saw, JC, like she's mapping out her charts, she's documenting everything, because that's how you find your edge over time, and that's how you become confident. Because then now it's just math. Like, all right, I have my trade plan. I know my strike rate over so many trades is 54%. Well, based on my strategy, I've never lost more than 6 trades in a row, 7 trades in a row. Okay, so I can feel comfortable trading at 2%, 3. Because over time I know my edge is gonna play out. That's when the game gets really sweet, because first of all, I have to become a good loser in this game. You have to. But you do that knowing that I found an edge in the market, and now I'm waiting for that edge to play out. So that's why you always hear us say, like, it's never just about one trade. It's about me being addicted to the process and continuously and consistently execute my trade plan.
This was so good. And Benny, when you were saying how to lose, you actually have a video that I really like about the right way to lose, how to cut that down and then go in half and cut it down. So you're absolutely right.
Absolutely, right? So this is the whole goal of the group, is all of us working together, right, to realize what really matters, right? Because all of this is helping you, like when you figure out that risk, it's all of that's going to help you with your trade psychology and everything. And then when you develop the patience to let this trade run, you're like, hold on, I just made $112 from 50 cents, right? I just made 24 bucks, 25 bucks from 10 cents. From something that people see on the ground and walk past every day like it has no value. Right? I can make that type of money from a can that I can recycle in Michigan. It's a beautiful game. And so that's why me and Ryan, we told each other, that's gonna be our new slogan. We trade small. Because if we could just really get that into people's head and really have people focus on the process and really understanding the true nature of top-down analysis and how powerful it is, and understanding, hey, just catch the pips and the money will come. Get consistent at catching the pips. Right? It becomes a totally different ballgame for people. Because guess what? If you could consistently work to do this, if you're trading at 10 cents now, at 20 cents now, you won't be there for long. You won't be there for long. We always say, like, me and Ryan talk to us all the time, like, man, if the market forced everybody to trade at 10 cents per thousand, people will learn to get better results. The issue is that people have a problem finding spots in the market to where you can get, right, where you can look at, for example, right, and this is where training, whether you're self-taught, whether you get mentorship, this is where this comes into play, when you truly understand, like, the market, right? So, example, on this UJ, right, you can see we've got a new fib. Why? Because this pulled back. Okay, you see where we pulled back? We pulled back to that 786, and this C to D move off this 786 hit the extension. So this fib is no longer active, right? So even if I took that trade at the 61.8 and I went in the drawdown, my stop's below the A. Once I got to this 127, right? Once I got to this 127, that was a 283 pip move. That's why we always say, like, we look for the bigger moves and we let the trade swing. Because if I traded that on a small account, like,
Would that be
Consistent.
one of the trades that be considered dripped in?
You could, yeah, on the pullbacks, you could, or
Okay.
as you're learning, right? As you're learning, hey, you just traded at 10 cents just because you let the trade run. You just made in between, depending on how it came out with your commissions, you just made between 24 and 28 bucks.
The
Right.
reason why I asked that because
Mhm.
I was trying to make sure that my aim for the daily 382, whether if it's bullish or bearish, is like the probable cause.
Mhm. So we know this is bullish, right? And now, so here, this is the daily fib, right? Right. Okay. If we eventually break through this level, it's gonna keep moving, right? We know, right? Just think about how this goes. Here's the 4 hour. Here's the 4 hour setup here. It's not done running yet. But we know, look at the impulse leg, and then look at the when you go down to the 1 hour. We're back in the sell zone. So this trade is run. Okay. We got to pull back to an 8.6. Here's our extension here, is not there yet. So what we're looking for is a correction, right? And then a move back up, right? Maybe we get a slight correction here, right? And then it pushes and it makes its final run to this extension. Well, that's okay on the 1, because on the 1 hour, if it does that, I'm still going to be in that zone of that 80-20. Here's that 4 hour extension. Okay. So if you played that back to the 382, right? You can make good on that. See if it tests resistance first and then makes the cut back down to the 382. But if you're just saying, hey, say you haven't been involved on this UJ at all, and you say, hey, I want to roll with the trend, then I would prefer that this comes down into this zone and then look to get long. Same thing over and over again, right? If it wants to give you that, right? So just like right here, look, you see how that pushed up? If this pushed up from here, made a slight correction and then pushed up, retested this B boundary and then pushed long and stalled around the zone, that would be almost identical to what happened here on this last flip. See how it pushed up and then it corrected? All right, that's still the same level of resistance. See that where we are now? It pushed up and it corrected. And then you think like, there's no way in the world. Look how impulsive this is. It stopped within that AB boundary and it reversed out, right? It reversed out for over 200 pips. Same thing here. Okay, it does the market. You ride it until it fails. So if it pushes up in this 80-20 zone, well, if it respects that level again, okay, I'm in an uptrend, but this is an up retracement zone. And so you make the decision to decide, do I want to play that back to the 382, or do I just want to wait for a new low price on this dollar yen and then get long when it gives me the opportunity? And so when you combine that with proper risk management, you good. Can you stack that? Like you said, is that an opportunity to stack the trade? You could, but while you're learning, if you just put one position in and let it go, that's okay. Like I said, if you're trading at 10 cents a pip, listen, get consistent. Pick out a bill that you have, light bill, whatever, and set a goal to pay that bill with money that you earn from trading. It could be a credit card bill, utility bill, your car note, whatever.
Benny, that's a great idea.
Mm-hmm.
That gives you motivation too. That's a great idea.
Yeah, me and Ryan were talking about that today. We were talking about it today. Pay a bill. Figure out a bill to pay. It could be $100 bill. Pay a bill, and it puts everything in perspective for you. It puts everything in perspective for you, because the bottom line is in this game. And the reason why like a lot of people are seeking out prop firms is because people realize after a while, like, man, to make that type of money,
on the stairs,
right?
You got that? Yeah.
To make that type of money, right? To make that type of money, that you see all the time out here, that, you know, whether it's true or not with a lot of people, it takes a lot of capital, right? To make the type of money you want to make and not put it all at risk, it takes a lot more capital than you think, right? So we said something like, right, you know, like, I mean, what, 10 cents per dollar, you would probably be, you would just be trading at $1 per pip at $10,000, right? Just think about that. But if I can get in trades, right, like we've seen running this week, you know, where that GJ over 240, right? The UJ was like 140 something, depending on where you call it. 200, so it was 200 some pips off that 61.8. And so now it doesn't seem right when you learn a methodology that enables you to accumulate pips. It doesn't seem so far-fetched that, man, I can get 1,500 pips, right? I could get 1,000 pips, right? So as your account grows, right, now every time I divide by that 1%, 2%, my lot size is growing too, but I'm still within the proper risk parameters. I'm not over leveraged. Everybody follow me on that?
Yes.
Yes.
So that's why we always say, like, man, we're not joking when we say, like, hey, get you a side hustle, whatever you got to do. Hey, allocate a few dollars, maybe it's $25, $50 out of your paycheck, pay yourself, you know. And even if right away you don't start trading on that account that you're loading with your money, just let it add up, and maybe you keep working in your demo account for a while, you know. Or if you get into a prop firm challenge, okay, every time I get my 50% cut or 75% cut, I'm gonna allocate this money to my own personal trading account, right? So I can start to build it to where I can get my account to 10, 20, 30K, right? Where I can get it. My mentor at NTR always used to say, like, once you start trading at a standard, you don't want to go back. You don't want to go back. And what he's saying is be patient, right? Set yourself up with a 3 to 5 year plan, gradually grow and work your way and earn, right, the privilege, right, to trade at those sizes, right? Because if you work your way up to that, you're working hard to develop a skill and to get consistent and develop that discipline, right? Develop that discipline to manage money. So that way, when you finally get to that level, you don't have to go back from there. So think about what you learn. Like we're not showing you guys how to just catch 10 pips, 5 pips, right? These are monster swings to where you don't have to trade at enormous lot sizes to make decent money. Okay, so just keep that in mind. Like if we look at these, right? So we do the ritual, we let the trades come to us. We came out of last week saying, hey, we want to make sure we're gonna fade that little bit of yen strength that we saw come in, right, a week ago. We're gonna fade that, right? The CAD yen, we're still expecting it to get to this 382. Okay, so think about the things that we talk about, right? So when you come here and you look and you come down to the 4 hour, I don't know what happened to my chart, but what just happened? But on the 1, because I was tracking it from there too, you can see, look, what happened. Remember when we were talking and we said, look, past resistance becomes future support. You see how that took off? Okay. Here's the 4 hour fib here. And we just got 1 hour sub fibs running off of it. Here's that daily 382 target. So if we get a correction, right, back down into the zone, if we get that correction, then we look to see how price reacts, and we get long to that 382 if the market wants to give it to us. Right. But you can see how this has been coming off this 786 level, and this trade is up off that zone. It's already up at its highest point, 381 pips. since May 4th. Not a lot of time. So if I'm in these trades, right? If I'm in all these yen crosses, I'm in them at, you know, depending on your account size, maybe I'm in them at 10 cents, right? Maybe I'm in them at 10 cents letting them run. Look, right? Here's the NZD-JPY on the 4. Okay, I have a target set. Look here, right? Look at it coming off that low. Okay, even if I took that trade at the 61.8, put my stop below the A, I had a little bit of drawdown. But look at its highest point where it's at. It's 175 pips. If I'm trading that at 10 cents, that's another $17. So that's 24, 17, whatever that last trade was that we just saw on the CAD yen, right? And we're just like whatever we saw on the UJ, right? It was I think it was 280 some pips or whatever it was. Right? We got the Aussie yen, as weak as it's been, still trying to move. Right? But we can see right from the weekly chart off that low that we had circled. Look at it moving up. Right? It's still right now. Look, some of them move slower. The Aussie hasn't been the strongest currency pair, right? But we're still taking it over the yen right now. So it's moving at a different pace, but it's still moving on that ABCD path right now. And so if I'm in there at 10 cents comfortably, I'm like, all right, I'm just gonna let it rock. 61.8, where are we at now? Don't look like much, but that's 200 pips. If I'm in there at 10 cents, I'm up $200. I mean, I'm up $20 right now. My risk is all worked out. So I might be in all of these setups. If I'm risking 1%, okay, I'm in 5 or 6 setups. If I'm risking 1% per setup, then my maximum drawdown is 5% if I'm in 5 setups, 6% if I'm in 6 setups. So you can set up in your trade plan like, hey, the max exposure I want to have on my swing trades is 10%, meaning that if everything blow up, I will lose 10%. That's why all of that stuff is important, because it just helps with your psychology. Overall, that's why we cover all the currency pairs, because our intention is not to go into every single trade trading a standard on a $1,000 account and trying to guess which one is gonna go. No, we're gonna put our toes in the water. We're gonna use proper risk management. We're gonna set our trade plan up and we're gonna execute. That's what we're gonna do. And we're gonna let these trades rock. Okay. Yes, you have leverage, right? The market gives you leverage 50 to 1, 100 to 1, 500 to 1. But the way we prefer to use that, right, is stacking the trades and letting them run, spreading it out over the diaspora, right? And then letting them run. And there's gonna be some that hit, there's gonna be some that won't. But as long as our risk is good and we're using proper risk management, our edge is gonna play out. Right? That's how we're doing it when we're swing trading. Okay. Look at here. Right? Look at that swing. Here was your 80-20 to the downside. Okay. So your risk on this, right, was somewhere in your 80-20 zone. It was 130 to TP1 382 was 246. Right? TP2 was 332. Divide your risk by your stop loss. Maybe that comes out to 20 cents. Did it hit the stop? Nope. Did it hit the target? Yes. You made money. Now we got a reversal. Here's our sweet spot zone. We know that the market's gonna correct. We know overall fundamentally we're bullish on the euro, especially against the yen. Okay. It's in our sweet spot zone, 61.8. I got drawdown. If I'm in there at 10 cents, I drew down almost $11. Okay. Now I'm up 20. And if it moves to my 1.18, that's $29 I just made at 10 cents. Cares that you trade at 10 cents. It's your journey. It's your goals. Don't matter if somebody's trading at 10 cents. And that's why you see us trade, just post charts all the time. It doesn't matter if you're trading at 10 cents or if you're trading at 2 standards. Success is success. Doesn't matter. Okay. So those are your yen crosses, right? And that's how we're able to make plays on a lot of them because our risk management, right? It all comes back to risk management. That's why we don't have to just focus on one particular. You can, if you want. There's a lot of ways to skin a cat, but this is how we pull it off. Questions?
Not yet.
All right. We're good. So hey, JC, thanks for sharing your chart. You're gonna have a lot of people inboxing you about that spreadsheet.
Already have, Benny. I already have.
about that spreadsheet out there. There's some cool options out there too when it comes to those spreadsheets and things like that in your journal. That's excellent what you did. We appreciate you sharing that. And anybody, listen, don't be scared to jump on here and share your chart. Your chart can be all out of whack and messed up. It can be lit up like a Christmas tree with moving averages and everything else. Like, don't be scared to share, right? That's how you compress time frames and shorten your learning curve, right? This is why we call it the inner circle. So it can be all out of whack. Let us help you fix it. All right. So you can become a consistently profitable trader. That's what the group is about. So we appreciate the discussion that's going on in the Discord. People sharing charts and doing these live sessions. Hey, can I share my chart? Let me show you what I'm talking about. Right? Stay engaged. Stay engaged. All right. That's how I learn.
That was really cool. Yeah, that was really cool.
Yeah, for sure.
Hey Benny, I want one of those shirts that we trade small. I want mine in blue.
Man, me and Ryan, man, we've been talking about that for the last few months. Like that.
Yes, I want we
Like,
trade small. We should have on one side that we let the pips come to us or something slick like that. I want one. I can see it. I'm envisioning it. I want this shirt.
Wait a minute. What Michelle recorded said it is what it is.
Come on.
it
Come
is
on,
what it
Joy.
is, right?
It's point blank, period.
Come on.
Point blank, period. There you go.
Point blank, period. That's it.
Yo, that's it. We need
that's it. Point blank, period. We got to do it. We got to do it.
Ryan, my point man. I'm gonna let Ryan hear this recording. So he's the mover and shaker when it comes to that. So yeah, that's awesome input. But seriously, like think about it. And like I said, then hey, let's get one bill paid. Let's work on that. Let's work on that. That's a huge difference, because next thing is gonna be a vacation that you're paying for your trading and things like that. So a little bit at a time,
What you mean next time? It's always the rent, gas, electricity, the flat tire, AAA call out for the extra free service. It's all of that.
I gotta get there, Joy. I gotta get there with you, Joy. Gotta get there with you.
All right, so awesome session, everybody. Really enjoyed it. Really appreciate your participation. Again, no sessions tomorrow. Ryan will get that email communication out, but we'll definitely be back on for that ritual. And then with the news and all the folks talking, the Fed chairs and central bankers talking, we'll make sure if anything really is major, we'll make sure that we communicate it in the Discord. Have a great evening, everybody. Had a lot of fun tonight.
Me too. Great session. Thank you. Happy anniversary again. Good night, everybody.